What's going on, everyone? Welcome to another episode of Disciple Principles. This is episode 30, and I'm here with a special guest of mine. Her name is Larisa Yarovaya, and I'm excited to have this conversation today. Just wanted to give you all a little background on her, but I did want to also mention that, with this show, it is a global movement where I like to bring on individuals from all walks of life. And I believe that it's not only important to talk about the developments of finance and business here in the US, but also talk about it throughout other countries, such as the UK, China, France, Africa. And now with Larisa, she's originally from Moscow, Russia, and she currently is a director for the Center of Digital Finance at Southampton Business School. And the university is based out in the United Kingdom, and most of Larissa's background and her education has been in finance and economics. She also has a PhD in finance as well, and she has contributed to various aspects of her publications in the international finance and the FinTech field. With that being said, welcome, Larisa. It's great to have you on the show.
Thank you very much for this kind introduction, Kevin, and it's a pleasure for me to be here. And I really hope that today we'll have very interesting and exciting conversation.
Yes, definitely. I'm excited that you're here. So to get this conversation started, I wanted to hear you speak on your journey on how you developed a passion for financial research.
Oh, this is an interesting question. So I started my academic journey in 2008 at the time of the global financial crisis when the economy collapsed. And since then, I have been interested in the ways how the crisis transmits from one market to another market. So this might be very relevant for current first-year students who are witnessing the COVID-19 crisis at the moment. And later, I chose to analyze the return and volatility transmission among international stocks and futures markets for my PhD research. And only later, due to the rapid growth and expansion of financial technologies and this boost in prices of the highly volatile new asset class cryptocurrencies, I got my attention to the digital finance area, in which I'm working right now.
So that's great to really hear, your journey and how it's evolved and progressed. And we're definitely going to go into details as we progress through this conversation. Now, I did want to ask, can you please explain how you see digital finance emerging in people's lives for years to come?
Absolutely. Let me first explain what digital finance is. Yeah, so digital finance is an umbrella term that used to describe the impact of technological innovations in financial service industry. So it includes a variety of products, applications, processes, business models that transform the traditional way of providing financial services. So, for example, financial technologies or FinTech is a big part of digital finance. So there are many ways how these affect people's life. So in my understanding, digital finance started with a dramatic increase in computer power and also with the widespread and adoption of the internet. Yeah, I know it sounds a little bit obvious maybe, but I think it's how it all started.
Mm-hmm.
Because many companies start transferring their face-to-face services online. So for example, online shopping, online payments, online mortgage applications, mobile banking, bills are paid online too now. Yeah, so these just a few examples that I'm sure our audience can relate to and familiar with. However, more complex things like electronic trading, artificial intelligence, algorithm, blockchain technology, peer-to-peer lending, cryptocurrency investments are those areas of digital finance that also affect people employed in various industries, by changing the way how they provide services to their clients. And this is an ongoing process. Yeah, it's very hard to predict where we will be, but the trend for digitalization in general is there. Yeah, it's very obvious.
Yeah, it's an interesting perspective. I believe that digital finance is really how we facilitate transactions now. I think that's definitely the vision of finances. It is moving more into a digital space, and kind of like how you said with just the mobile banking, electronic trading, and everything happening with FinTech, with blockchain technology, it's really showing the value and the use of why a lot of investors and even businesses are migrating to using Bitcoin and many other crypto assets. So, with speaking on that, I wanted to also just really touch on. I believe that the reason why investors like Bitcoin and many other crypto assets is because it's decentralized and it doesn't require a central bank or a central server to facilitate transactions. So can you speak on the role of blockchain technology with Bitcoin or maybe some of the other crypto assets that you have done your research on?
Mhm. Oh yeah, this is very important question, and yes, it's often hard to explain
Mhm.
to the uninformed audience what are the difference between Bitcoin and blockchain, and what are the difference between Bitcoin and other cryptocurrencies as well. So just to explain it simply, we can say that Bitcoin and other cryptocurrencies and other decentralized applications are created using blockchain technology. So blockchain is a growing list of records. Yeah, so just such a record database basically. And these records are called blocks. That's from where blockchain derives its name. So the data in any given block cannot be altered retroactively without making changes to all the subsequent blocks. So blockchain is resistant to modification of its data, which makes this secure way of storing information and data. Therefore, blockchain technology in general can be used to securely record information about any transaction or data transfer. And one of the most famous application is money transfer or digital currencies. Yeah, so such as Bitcoin, for example, which is the most well-known cryptocurrency nowadays, or Ethereum, Ether, Litecoins, different types of stable coins as well that are currently very popular. And there are thousands of other cryptocurrencies do exist.
Yeah, I believe that the kind of when I was trying to understand the differences, I believe that with Bitcoin, it's pretty much the actual currency is more of the currency that's being traded, but then blockchain is the underlying technology behind it. So it's more of the ledger system of how the blocks are put together to create the platform to trade Bitcoin and many of these other crypto assets. So that's kind of how I have understood it. It is a complex, conversation, but I believe that everything with FinTech is really just more education. I think the more you take the time to research and take the opportunity to understand it, it's not as complex. It's just really all education and knowledge. And I also did want to just speak on just as today's recording of December 16th, 2020, Bitcoin has surpassed its highs of back in 2017, late 2017. It was around the 19,800 mark. And right now it's trading at about $20,825. So in the midst of a pandemic, I believe that cryptocurrency is really presenting opportunities for investors and businesses where this technology only has more growth to go in the future. And I believe that we will eventually move to this type of currency when facilitating transactions to exchange goods or services. And I wanted to get your opinion on the growth of where you see Bitcoin going in the future and just kind of your research on what you have done from what is done in the past to what it's doing now.
This is very important and very relevant question. And I think many our viewers currently just thinking, okay, shall I invest in the Bitcoin right now? What is the future of this cryptocurrency? And I have two different opinions here. So one is kind of long-term view that I definitely agree with you on it, that cryptocurrencies have great potential, that I'm sure that they will continue to grow and continue to expand in the future. And this trend is there. Yeah, so I'm quite optimistic in terms of long-term sustainability of this financial instrument. Therefore, without providing any financial advice, yeah, I can tell that traders and investors should pay attention to this new investment asset class. However, considering the situation that you just described about this tremendous increase in Bitcoin prices that we've seen today, here I would personally recommend to be very careful with this situation, because according to our research, and we researched the situation in 2017, we identified that it was explosivity on Bitcoin in Bitcoin prices. I'm sure you've heard the term asset price bubble. Yeah, so this was exactly the situation, how we can call it in 2017, that Bitcoin bubble occurred, and bubbles have tendency to burst. So a bubble can burst, and it could be sharp depreciation of the Bitcoin prices, and the price can immediately and very quickly decrease and lost like 50% of its value, which could be substantial losses for investors, for individual investors. Therefore, I think investors now at the moment need to be very, very careful. On the one hand, it provides a great identification that Bitcoin increasing its value, yeah, and the price is growing, which can be considered as a positive trend. However, on the other hand, you need to keep in mind that it could be bubble-like behavior, yeah, and that this increase in Bitcoin price can fall, can cause, the burst of the bubble, and it could be a sharp decline in Bitcoin prices any moment in time from now.
No, you're absolutely. I couldn't totally agree more. I believe that just as much as the success we have seen with Bitcoin, it is very volatile. And even back in late 2017, when it reached that high, it immediately went down significantly. So it was at a bubble at that time, and we could be seeing a resemblance of what happened back in 2017. And earlier this year, it was only at around 8,000 at the beginning of the year. So I think for all of my investors out there, kind of like what Larisa is saying, you want to also be aware of the risk. It is volatile, and you have to understand that if you are able to take the volatility, be willing to look at the losses as well as the gains. You don't want to put yourself in a situation where you're putting all of your eggs in one basket. So, what we're saying, it is a great diversification tool to put in your portfolio, but you want to make sure it's not all of your eggs in one basket, because it's very volatile and we may be in bubble-like behavior at the moment. So be aware of that. Now, another aspect of blockchain technology that I have learned about is cryptography, which is, when I've done the research on it, it's the science of secure communication. And I wanted to hear, in your opinion, how does cryptography enhance communication, whether it's with digital wallets, transactions, security, or even privacy preserving protocols?
Yeah, this is a very important aspect. So basically, the security of blockchain is achieved with the help of the modern cryptography. So the blocks that I talked before about, yeah, are linked with each other via computer code or computer algorithm, which is called cryptographic hash function. It is a one-way function, which is practically impossible to invert. So similar function used, for example, in digital signatures, when you signed a document and after you can no longer edit it. Yeah, so probably many of our viewers used the digital signatures before and can relate to this example. So cryptocurrencies specifically rely on so-called digital wallets. So what are those wallets? Those wallets are financial accounts that allow users to store funds, make different cryptocurrency transactions, and also track payment histories using the computer. So cryptocurrency wallet offers the functionality of encrypting or signing information. So again, similar to these digital signatures example that I used. So cryptocurrency itself is not in the wallet. So in the case of Bitcoin, for example, the cryptocurrency is stored in blockchain. So it's stored and maintained in a publicly available distributed ledger. Yeah, it's what is blockchain basically is. However, the wallet contains pairs of public and private cryptographic keys. Yeah. So, and I explain what it is. So a public key allows others to make payments to the address derived from it. However, a private key enables the spending of cryptocurrencies from this specific your address from your wallet. Therefore, cryptography, of course, helps communication and helps to make it secure, to make secure a transaction that will not require any authorization from the bank or any other centralized authority. That's why we call in cryptocurrency decentralized assets, yeah, because of this mechanism and how the cryptocurrency, how they built on, how they constructed.
Yeah, no, you're absolutely right. And I think that cryptography, it plays a major role, with just the communication of how the currencies are even stored on blockchain, and even the use of the keys, such as a public or a private key. Now, I did want to explain, I was able to read a great book that I would recommend for my viewers. It's called Crypto Assets, and the authors are Chris Bernusky and Jack Tater, and they really discussed in the book how to measure risk and reward when analyzing cryptocurrencies. And one way that you're able to measure risk is you can use standard deviation ratios. And another way of how you can measure reward is looking at Sharpe ratios or the expected returns. And I wanted to hear your perspective on how investors can measure volatility and expected returns when analyzing cryptocurrencies.
This is a great question, and at the same time, it's a very broad question. Yeah, that requires potentially very broad answer, but I will try to keep it short.
Sure, yeah.
So to begin with, standard deviation and Sharpe ratio are those standard tools that can be used to analyze returns and volatilities of any assets, not necessarily cryptocurrencies. Yet they can be used for cryptocurrencies, but normally these tools can be used for any other assets, precious metals, different commodities, stock indices, yeah, regardless which assets you want to choose. So another simple measure, which similar, I think, in terms of usability, in terms of how easy to compute it, is beta coefficient. Yeah, and particularly beta can be calculated also for any cryptocurrency in relation to Bitcoin. So Bitcoin returns and volatilities often can be used as benchmark for other cryptocurrencies, yeah, to calculate different measures like a beta coefficient. Also, various Bitcoin volatility indices are easily accessible online. So again, I want to stress here that not necessarily investors and our viewers, yes, should calculate every single coefficient themselves. So occasionally it's just great to have a look on available information online and all the indices that are already there, and to analyze these indices that often built on various different methodologies, and to recreate similar index yourself. Of course, it will be very challenging. Yeah, so, but these indices can provide quite an interesting information and show us a good picture of cryptocurrency market volatility. So what is more important here, specifically for return predictability, that you should familiarize yourself with the determinants of cryptocurrency returns and to read more literature on the related topics. Particularly, it would be interesting to have a look and to understand what are the relationships between Bitcoin and stock prices, or what are the relationships between Bitcoin and gold prices, or how the news media, different types of announcements determine Bitcoin returns. So this information can really help to make more informed decisions. Regarding more complex methods, here, I don't know, just to briefly again explain it, that generally speaking, all standard econometrics tests can be employed to cryptocurrency markets. Since cryptocurrency is just another asset class. So we can perform any time series analysis to analyze returns and volatility of crypto markets. And investors who already have experience with other assets and some prior knowledge of econometrics and investments, they can actually use and should be able to employ these skills to analyze cryptocurrencies and digital assets. However, if they don't have any prior knowledge and skills, then it is important to acquire these skills, and to of course to learn first before trying to invest. Otherwise, it will call gambling. It will not call investment anymore.
I believe with investing in any asset, you want to make sure that you have proper fundamental and technical analysis, and I believe that you spoke on a lot of important aspects. Also throughout the book, it really discussed how, you want to look at how the relationship of this technology is being used amongst businesses, or seeing what other companies have in alignment with this cryptocurrency, if we're talking specifically in that asset. And I believe also for most cryptocurrencies out there, they all have white pages, usually GitHub. I might be saying it wrong, but I think it's called GitHub. And it kind of gives you a breakdown of why the technology is in existence and what value and what problem they're solving. So I believe that any investor that is looking to invest in it, doing your research and looking at those white pages are so important when it comes to specifically crypto assets. So there has been much skepticism, whether banking institutions or even the government will accept crypto within our current financial monetary system. However, there has been many developments with banking institutions, financial services, and even innovation labs amongst universities that are assisting with the development of not just crypto, but just the blockchain technology behind it. And can you speak on the developments of blockchain technology with Southampton Center of Digital Finance?
So we have a Center for Digital Finance in the Southampton University in the UK. So in the Center for Digital Finance, we employed the multidisciplinary approach in our assessment of recent developments in blockchain and financial technologies, and in finance and banking services in general. So this means that colleagues from various fields of science, such as computer scientists, risk analysts, financial researchers, are working together as a team to provide a solution for urgent business problems. So we have several interesting projects currently running in the Center for Digital Finance, again, on different algorithms and artificial intelligence, and different projects in FinTech. For example, one of the projects that I personally involved and working on is environmental sustainability of the cryptocurrency. I think for many viewers, this could be quite an interesting topic, because as you may know, that Bitcoin and other mineable currencies are quite energy consuming, and the Bitcoin energy consumption already increased, and can be comparable to consumption of electricity of several nations. So it's very, very energy consuming. Therefore, in our research, we are trying to understand what is exactly its contribution to the climate change, and what will change in light of new Ethereum architecture, and specifically the proof of stake consensus mechanism that currently everyone talking about, which will replace the existing proof of work mechanism, and which aims to be more efficient and subsequently better for environment. Yeah, so this the current debates that we are trying to analyze, we're trying to use more comprehensive approach to assessment of different environmental impacts of this new technology and new investment class, and overall different environmental impacts of expansion of the financial technology and how we are doing business in different way. And of course, the relationship between cryptocurrency prices and energy sector and different utilities and energy providers. So that's what we are looking at the moment.
Yeah, that was very informative. I believe I definitely want to do more research on the environmental sustainability when it comes to cryptocurrency. And I also am going to be paying much attention to what you all are doing at the Center of Digital Finance in Southampton. And I know it's a lot of great research being in progress. Now, I wanted to get your take on, do you believe Bitcoin will be an inflation hedge similar to gold? I know many people, for many investors for a long time, they did look at gold. Well, gold is an inflation. It is an inflation hedge, but a lot of people have looked at Bitcoin as being, I guess, the new digital gold from a lot of various topics I've read online. But I wanted to get your take on, do you see Bitcoin being an inflation against similar to gold?
Yeah, this is a very good question, and you're absolutely right. I think currently so many research papers and different financial press articles are comparing Bitcoin with gold and with other safe haven assets. Yeah, so just to explain what safe haven means, it means that those assets that been less susceptible to the crisis shock. And during the crisis, normally investors having a so-called flight to safety behavior, and they're trying to invest and allocate their funds to relatively less risky assets, such as gold. Gold being considered as a traditional safe haven and specifically for hedging inflation. However, the evidence for Bitcoin now is rather mixed. So some early papers suggest that Bitcoin has similar safe haven properties and hedging properties, very similar to gold. However, the most recent papers, particularly on the COVID-19 crisis, since this is the most recent crisis shock that we experience right now, show that Bitcoin is not effective safe haven or hedge or diversifier. So you can see there is quite mixed evidence at the moment available for Bitcoin. And evidence is also inconclusive, specifically whether Bitcoin is effective inflation hedge or not. However, I do understand why this idea sounds reasonable and why investors can view Bitcoin as a store of value, and why they can consider to use Bitcoin as a hedge against inflation, especially if we are talking about emerging countries with high rates of inflation. So we should not forget that inflation varies from country to country. And if you consider, I don't know, UK, you can say, oh no, this is crazy, and nobody will invest in Bitcoin to hedge it against inflation. However, we're talking about other countries when inflation can be much higher. Here already, why not? Maybe Bitcoin would be considered as effective hedge from inflation.
Yeah, no, I totally agree. And it's yet to be determined, if it's going to be like you said, a lot of the reaction has been mixed. Some people say, it is an inflation against gold, but others feel that it may not be as much as a safe haven asset compared to gold. So it's yet to be determined. Like with all of, Bitcoin has only been around since I want to say 2013 when it first hit the market. So everything is still fairly at the beginning stages, and it's still a lot more just progression that we have to see of how it will unfold. So as we're coming to a close with this episode, I did want to ask, when it comes to asset allocation in an investor's portfolio, from when I read the book in Crypto Assets, it talked about how some individuals do like to put their money into alternative assets such as crypto, just to give themselves more diversification. And we mentioned it earlier, in this episode, how, it is a way of how you can diversify, but it is very volatile. So I did want to get your opinion on, do you think that investors should strategize and invest some of their money into these alternative asset classes when they're balancing their portfolios?
Yeah, this is great question. And again, just to acknowledge that I'm not giving any professional advice here. I'm providing my position as an academic, based on the scientific evidence here. So what research show us at the moment? So it's been demonstrated that even small allocation to Bitcoin and cryptocurrencies can actually increase portfolio returns and to help to achieve these diversification benefits. So this what findings shows from the academic papers. And considering these findings, of course, I can say that it makes sense for investors to consider crypto assets and other alternative investments, as you mentioned, as a potential direction for investments. Of course, you should not ignore these modern and alternative assets, because these assets attract attention. They have high volatility, and volatility actually means that there's greater potential to achieve abnormal returns on these markets in comparison to less volatile, safer, more mature financial markets. Therefore, of course, it comes at risk, and you will have to accept higher risk if you want to invest in cryptocurrencies and Bitcoin. However, if you're talking about diversification, if you're talking not like put, as you said, all eggs in one basket, and not allocate all your money in Bitcoin or all your money in digital assets, but if you're using it for diversification purposes and considering some small part of your portfolio, then you can, rely on these academic evidence and findings that small allocation can also help you to significantly and quite substantially improve the returns of the portfolio.
Yeah, thank you for sharing that. I believe that, it is a great way to diversify, your portfolio, but you have to do the research. And, I believe that with any asset, like we mentioned, you taking the time to do your analysis, proper analysis, and being educated on the topic is the most important whenever you want to invest your money into an alternative asset. And for those investors out there, I did want to mention there are two funds that you can invest in, as far as that invest in Bitcoin and are publicly traded. And I'm not a financial advisor as well, but I did want to just mention from what I found online, there's two funds called GPTC and ARKW. And GPTC stands for the Grayscale Bitcoin Trust. I don't know if you have heard of that fund, Larissa, but
there are many cryptocurrency and Bitcoin, funds now, and it's again another new wave of academic research that consider different hedge funds and that focusing only on cryptocurrency. So cryptocurrency funds, and I personally haven't researched them yet, but it is on my list that in future probably I will consider them as well.
It's pretty much the Grayscale Bitcoin Trust. It trades on the over-the-counter markets, and over-the-counter. When I say that, it's pretty much a decentralized market in which investors, they can either trade stocks, bonds, or commodities or currencies without a central banker or even a broker. And you're able to trade this on a brokerage firm or any other tax advantage account, such as an IRA or 401k. And then ARKW, it actually, the ARK Investment Management Fund, it invests in disruptive innovations. And I put this on my Instagram, and this ETF, ARKW, is called the Next Generation Internet ETF. And it has the Grayscale Bitcoin Trust in it as well. It's about 2.68% of the portfolio holdings. So for those out there, I would definitely say take a look at those two tickers, they could be, great ways on how you can diversify. And just the final question I did want to ask you, Larisa, is how can our viewers connect with you and learn more about your publications online?
All right. Yeah, so I'm very open for the comments and to stay in touch with your audience as well if they will have any questions. I think the easiest way to find me is to follow me on LinkedIn. I think it's the easiest way to reach me out. And I'm regularly posting and sharing different links to my working papers and to my published papers. Many of those papers are available for download, for immediate download for free from such databases like SSRN and ResearchGate as well. And also you can find more information about me on Southampton University website, of course, where you can see my staff profile there with full list of my academic publications and research that I've conducted. And also you can check my personal website and my personal blog, and you can follow me there if you want.
Yes, and Larisa, I'm going to put all of your LinkedIn and also your website where people can look at your blogs and publications. I'm gonna put it all in the show notes. So everyone, I'll have her information in the show notes of this episode, so you can connect with her. And as for me, for Insightful Principles, just continue to please like, subscribe, and share. Continue to keep sharing this amongst your family and friends. And I'm going to put the link tree in the show notes as well, so you're able to listen and stream this content in other ways. And once again, Larisa, I want to thank you so much for taking the time to come on the show. It was a great one. You did great, and I just appreciate your time so much.
Thank you very much for your kind invitation, and it was an absolute pleasure for me. Thank you.
No problem. Well, thank you everyone for tuning in, and we'll see you next time.